Hey there, if you're ready to take your mobile notary and loan signing business to the next level, you're in the right place. Welcome to the Sign and Thrive podcast with Bill Soroka, that's me, and friends. Let's go and get it.
Go and get it. Go and get it. Go and get it while the night is young.
Hey everyone, as you're going out and getting it, remember that time is money. If you want to save 15 minutes per appointment and still stay in compliance and best practice standards for your notary journal, check out the Notary e-Journal by Jurat Inc. It's designed to help improve your workflow and efficiency, and it allows you to capture signatures and fingerprints digitally right on your phone or tablet. This is the journal of the future. If you're ready to save time, money, and wow your customers, try the Notary e-Journal for just $1 at notarycoach.com/e-journal. All right, welcome to the Sign and Thrive podcast. I'm here with Miss Renea Dentman. She's a corporate accountant and a fellow notary public. Renee, thank you so much for finally making this happen.
Thank you, Bill, for having me. This is super exciting. I am just honored to be here in the space of I always call it the New York bestseller, Sign and Thrive. Okay.
Thank you so much. I really appreciate that. And we're going to talk about something. Well, I'm grateful for people like you that are passionate about things I'm not passionate about, which is the accounting, the bookkeeping, the tax strategies that go into it. But the reason I'm grateful is that all of that stuff makes a huge difference. In fact, I would say it's make or break a business, especially like ours, a service-based business, sometimes where margins can be lean sometimes. So your strategies, I've been following you for a couple of years now. You've helped notaries across the country, especially with the PPP loans. I know you do a lot of coaching and consulting. So that's what we're going to talk about today. Tax strategies and preparing for tax strategies, right?
Exactly. And that's like everyone that's a business owner should fall in love with it. I mean, maybe not as much as I do, but these are things that people don't teach, right? We know how to make the money, but how do we keep the money? And how do we make sure that we maximize the growth of the money?
Yeah, it's so important because it's, especially when, in my particular situation, I went my entire life not making any money, like always being broke, always pulling up by the bootstraps. I had 26 business failures. So making $1,000 a month was good money for me, right? So when I finally started making money, it went so fast. I've never been so poor as I was when I was making, a couple $100,000 a year, because I didn't know how to prepare for this. So this is a gift to be able to share strategies like this. And I feel like one of the main questions I get all the time is how to even structure your business when you start out. Do you have opinions on that?
Yeah, absolutely. So just a little bit about, I've been an accountant for 10 plus years, and I've been a business owner for about 5 plus years on a different business. And I've been a notary for about 2.5 years. And the reason why I was able to excel in it is because I had a different business. We always, that first baby we fell in, right? Or we learn a lot of loops and holes. And I think I'm here because of the fact that I want other notaries to know the things that I learned in my business, number one, that I was able to dominate in my business, number two, just because of that. So when it comes to business structure, I was a DBA. I was doing business as Bill. I thought that I was that allowed me to get a bank account. That allowed me to get checks in my business name. And I thought that was the best thing for me at the time, because it was not Renea Dentman, right? But little did I realize that may be great if you are on a tight budget, but you have to understand my life was a little bit different. At that time, I had no house, right? So I had no assets. I was in student loan debt, right? So there's no liability that I can maximize on my assets, right? And then on top of that, it was just that I didn't know about the liability part, right? That they can come after you, right? I thought just not commingling my funds was enough. So just going back to the question of just the DBA, it's not recognized from a state level. I didn't know about funding, right? The possibility or grants that want you to be recognized on your Secretary of State versus just the county level, right? So a DBA, doing business as, going to the IRS and getting your EIN number and not knowing more about it, that is just on a county level and just having county's tax or a city level. It's not on a state level and it has no protection. So here in California, yes, baby, California, it's $800 to be a LLC annually, the annual franchise tax board. So the average notary or the average business owner, they look at that number, they hear about that number, and they think twice about it. But when you really think about it and knowing your number, that's only $60 a month, right? How often do we use $60? That's going to protect you. So when I'm really breaking this business structure down, I ask the notary, what is your net worth, right? And I ask them based off of what assets do you have? What are we protecting for that liability? Now, when I make that make sense, then you'll start to realize that an LLC may be the first step, or an S corporation or a corporation may be something that you want to look into more than just a DBA, right? But that's where I go with that.
Yeah, I love that you put so much thought into that, which most expert advisors would, because the experience I have is in coaching notaries all over the country is they want a blanket policy for everybody. They just want to say, just tell me what to do. And of course, I am not an attorney. I'm not an accountant. I can't advise on that. And every situation is different. So I love that you highlight that. What are you protecting? Because that's really the main purpose of an entity, right? It's
exactly
it's liability protection and tax efficiency if you do it right.
And let me add a couple other things if you don't mind, Bill.
Sure, please.
So it's about the goal. What is the goal? What is the purpose? What is the race that you're running, right? And that's about the network. So let me add two additional gems, right? I'm a gem dropper, right? Gem number one is, are you trying to buy a house, right? So if you're trying to buy a house, the strategy of that is, the fact of the matter is, do you opt into a corporation? Because you can now issue yourself a W-2, right? But at that moment, we're going to dive a little bit deeper of when someone should opt into a corporation. And then number three is, the fact of the matter is, a LLC is great, right? And a corporation is great, but what is your true net, right? That matters, right? And also when it comes to buying a house, do you want to exhaust everything or do you not? So that's where we're going to go a little bit further into, what are your goals? Because if your goals is, hey, I already have a house, I'm not looking into being an investor or buying my second home, then maybe a DBA is best for you. You know, maybe a LLC is best for you and not going up the ladder, right? If you're like, oh my God, I want to have a house. Well, maybe you can't exhaust everything, right? And we're going to later talk about that. But those are some of the things.
Yeah. I'm so glad that you're going to talk about that, because I hear nobody wants to pay taxes. But if you have a major purchase that you want to make, like a home or another business, or you've got to prove income, you can't, right? Or as you said, exhaust every avenue, right? You've got to show income and you got to pay tax on that income. So right. I'm glad we're going to get into that.
And it's the golden plan, right? What is your golden plan? I think a lot of notaries get into this industry and they see that it's an opportunity to make money, which is great. I was able to excel. But did you come in with a plan? And when you come in a plan, that's where business structure, business foundation start, is right there. It's not about making the money in. It's about how are you going to navigate through the process.
Yeah. Excellent. All right. Well, let's talk about it. So what do you recommend? What are some of the tips for not even just mobile notaries, right? Like, granted, this is the Sign and Thrive podcast. we're credentialed professionals that work on the road. So what are some tips for us?
Yes. One of the tips that is great for you is make sure when you do your mileage, right? So we talk about that, but then some people don't understand. So there's 3 different type of systems out there that I recommend. Notary Gadget, Notary Assist, and VinBooks, right? They are made for notaries. Some people like to say, hey, I want to use my Square account, or I want to use SnapDocs account, or I want to use QuickBooks because they have self-employment. But I think that you got to get used to bookkeeping, right? So when you do bookkeeping, and I recommend these 3 particularly, why? Because it takes our mileage into account automatically. And on top of that, it takes our notarial exemption account. So if we track back, get your bookkeeping, right? Get your front office together. Make sure you're using these systems. And it's not, oh, I'm going to do it after. Just do it before you go on your signing. Just enter it. You can always come back to it. But let's just make sure we're doing data entry. No accountant like data entry. No, no one like it. It's brutal. Bill is brutal. But that's the first tip right there. Because if you really do these 3 systems, I promise you, 2 of the major problems is people don't know how much to exempt. They can't pull a profit and loss statement. And lastly, they forget to put their expenses in. And they think that they can write off everything, such as when we're driving, being a mobile notary, you hear all the time, save your receipts, save your receipts. But it's save your receipts in the concept of learning taxation. When it comes to mileage, you can only have 2 options, the actual or the standard mileage. You can't double dip. So if you have a registration, you have a parking ticket, you have something that you bought from AutoZone for your car, and you're saving all those receipts, that's the actual mileage deduction. That is not standard. So what is standard? Standard is the 50 cents method, right? You get 56, 58% on your mileage. But if you opt into one, you can't take the other. So saving your parking tickets, saving your registration, even gas. Some notaries think that they can write off gas. That may be true, but you gotta pick and choose before you even start.
What do you think? So this was a slap in the face for me when I first learned this. I was like, what? I'm saying literally I had shoe boxes full of receipts and I never did anything with them, but they were still, I was collecting all these receipts and my accountant was just like, no, you got to choose one or the other. Do you want to keep track of every single expense or do you want the mileage deduction? And here's what he told me. And you tell me if you agree. He said the mileage deduction works more in my favor usually. Do you find that to be true?
I find that to be true. And these 3 systems, Notary Assist, Notary Gadget, and VinBooks, they do that. They already generated where you're going to where the next appointment is, where the next appointment is. So they automatically, in your profit and loss statement, when you run it, they already did it for the entire year, right? But then there's notaries going in and say, well, I got a parking ticket and I got registration and then I pay my gas. You can't double dip. So I definitely think standard mileage is for the average person coming in. But the buffer and the caveat to that is bonus depreciation, Bill. And that's a bit loud. But I'm going to break that down.
Yeah, please. What is bonus depreciation?
So we have regular appreciation where you have the existing life of just a vehicle. So the average vehicle existing life, if I'm not mistaken, is like about 7 years. Existing life of a vehicle. But with bonus depreciation, what Trump put into standard up into 2023 is that if you get a vehicle over 6,000 pounds, like a BMW G-Wagon, which is 6,000 pounds, right? That you can exempt off your first year at 100%.
What do you mean? What's getting written off? The cost of the vehicle?
The cost of that vehicle.
Wow.
And that's actual deduction, actual mileage. So in that situation, so we just talked about standard, the mileage, and you can't double dip. So bonus depreciation is you can write off the entire value that you purchased for the vehicle.
So the brand new vehicle only or used vehicles?
That's a really great question. And most of the time, these vehicles will have to be connected to your corporation, right?
Okay.
It's not only the reason why not, but yes, it has to be like you personal guaranteed on the vehicle, or it's also part of your LLC. But that's pretty much the matter of the fact. And or if you personally do it, you can still do it, but you have to use that vehicle up to about 80% of the time and not 20% of that. But I know that is advanced, but I want to put that out there. I want to put it out there because that's how actual mileage, that section, can really benefit. If you know that you're going to purchase a car in this year, well, try to add your corporation to it. And then at that moment, even if it's less than 6,000 pounds, the useful life of a vehicle, 7 years, right? Now you can depreciate it over 2 or 3 years. Now, if you do like $30,000 vehicle, right? $30,000 divided by 3 years, you're going to write that off and depreciate that even faster. And that's $10,000 every year versus you have to divide that by 7, which $30,000 divided by 7, right? The depreciation of that would be about only $4,000 a year. So the fact of the matter is, if you use actual mileage, right, you can benefit off just the vehicle that you just got, right? You can write it off quicker than you ever can through depreciation. And then lastly, all those other things that you wanted to write off with your receipts, you can. Your gas, the average gas is about $2,500, okay, a year. So a notary usually pay about $2,500 a year on gas, right? On the average person. So you can write that off. You can write, oh, I got a parking ticket, which is a struggle of being a remote notary, not a remote notary, a traditional notary, right?
Yeah.
So
yeah.
I think that's what I wanted to kind of put as a caveat.
I love that. So what I would take away from that conversation is, I'm going to talk to my accountant about bonus depreciation. I'm just going to ask about it. But let me ask you just a clarifying question. So the bonus depreciation, is that only for actual mileage deduction, not the standard deduction?
That's only for actual. And thank you for that clarification. So you have the actual, anything that has to do with the parts of a vehicle, the transportation of a vehicle, it will fall into actual outside of mileage.
Okay. All right.
All the listeners that are listening, anything that you think that has to do with that vehicle, from a parking ticket to a registration to insurance to a title to whatever, that is actual. It's itemizing all of the things that has to do with your transportation and your vehicle.
And if you decide to do that, like say you do buy a new car one year, so you do actual that year, the next year, can you do mileage?
No, you can't change.
You just stick to it no matter what, right?
Technically, that's what they say for the useful life of that vehicle. So if that vehicle is going to be with you for at least 5 years, technically, you can only do one.
Okay.
Because you're still depreciating. So if you use actual and you bought a vehicle, you're still depreciating in year 2 and year 3. Remember when we did that division, 30,000 divided by 3, you're depreciating 10,000 every year.
All right. Great advice. All right. That was just tip number 1 with some caveats and good information there. What else you got for us?
Okay. Next, one of the things I want to be the plug for this, for the notary community, like the notary accountant, the notary tax specialist. Why? Because people they talk about it, but they don't know how to apply it. Right. And what am I talking about? I'm talking about the exemption, right? Exempting. We hear it. When I got in this industry back in 2019, that's all I heard. Right.
Are you talking about IRS publication 334? That exemption?
Yes, sir.
All right.
Yes, sir.
Yeah. Can you explain that first before you go into it?
Yeah. So IRS publication 334, it allows notaries and ministers, two people in the world that can be self-exempt on a federal level, not a state level. So they recognize us as a public servant, right, in these different professions to now take advantage of voluntarily exempting our self-employment tax. Our self-employment tax is 15.3%. Okay. So because of the money that we make, we will have to pay 15.3%. So how do we make those numbers make sense? And I'm good at doing that. So if I made $1,000 for the year, right? And I wanted to do 15.3%, I should have put away $153 for the year. And what that breaks down to is $12.75 every month. So therefore, I was prepared to pay taxes on that $1,000.
$153 for every $1,000, though. That's easy to extrapolate for sure.
Exactly. Exactly. And
No, go ahead.
with that being said, this is one of the things that is a pro and a con. The pro is that you don't have to pay taxes on your notarial acts, right? And I'll break that down a little bit. But the other part is if you opt into it, it's the opt in or opt out, right? On the form, it's a Schedule SE. Schedule SE. That's what you roll over to your Schedule C. But let's just say, can I do partial? Do I have to do everything? So I look on my profit and loss statement from my P&L, from pulling from one of these three accounts. It says that I am capable of writing off $10,000. That's how many notarial acts that I did in my state, right? For the year of 2021 or 2022. At that moment, can I do partial exemption? What if I don't want to write off all of it? Yes, you can do that. You can write off as much as you want, long as you are minusing from your net profit. So if my net profit is $10,000 and my notarial exemption is $10,000, then zero, right? But if my net profit is $10,000, I can do a partial and only say I want to apply $5,000 to my exemption. These are different things that notaries hear about, but they don't know how to apply it. And it's not because they don't know how to apply it. It's because I did the work, right? From the level of the education I have with my master's in accountancy and just working corporate experience, I was able to poke holes in calling up the IRS, getting around my CPA friends and my enrolled agents and making sure that where are these forms, right? And really understanding them, how they flow and where to put them. If you go to publication 1040 SE, it tells you exactly how to do it, Bill.
Yeah.
It writes it down of what form, how it flows, and how to put exempt notary. They tell you on the dotted line of a Schedule C, put exempt notary on there, Bill. And no one's talking about that, Bill.
Why do you think that is?
There's no paradigm shift, right? In the community. In the community, it's like, go ahead and get this money. But the paradigm shift has to say how we protect this money, right? How do we just don't hear what rumors say, but how do we really apply it, right? How do we sit down? We have Zooms and webinars and masterclasses of learning the notary industry, but we don't have Zoom and masterclasses of learning how the forms flow. I'm not asking you to be an accountant. I'm not asking you to taxation. I'm asking you to be a formed and empowered entrepreneur that is a notary.
Yeah, I love that point because it really isn't how much you make, it's how much you keep. It makes such a huge difference. And I learned that lesson again, really the hard way, because I was making more money than I'd ever made even before I started coaching. I dialed in a system. I started making ridiculous money at this. I used to pinch myself and say, there's got to be something wrong with this. How can this be? How can I love the work I do so much and make so much money at it? But then at the same time, I would look at my bank account and I was living in the same broke mindset. Yeah, I was making money and spending money. Like it was just coming in, it was going out. And I wasn't planning for tax. I remember when I was like a few years behind on my taxes and I called the IRS and they worked with me and they're like, you don't owe anything. You didn't make any money. I mean, that's how bad it was, right? They're like, they wanted to send me money. They felt so bad for me because so I took that mindset into this business and it really could have jammed things up really bad. So I'm glad I had advisors, people who are passionate about this to help pull me out.
Yeah.
But I want to go ahead. I'm sorry. Yeah.
Yeah. I think that when it comes to Rich Dad, Poor Dad it's the concept. It's a thick book. It's a book that's going to take a lot to get through. Right. But one of the things that it pulls out is the cash flow quadrant. Okay. And they talk about going from employee to business mind. They also talk about from being a self-entrepreneur to investor and how these mindsets has to shift. We want to work for ourselves, but what is all the different moving pieces about it, right? And one of the things is taxation, right?
Yeah.
You're your human resource. That's what really the position and the role that you're playing, because human resource don't make sure that you fill out a W-4, right? When you come in, they don't make sure you fill out that W-4, and that W-4 is going to say what zero exemption you're going to do. You're going to write a 102. And that right there is the entry level of how they're going to tax you on your checks. Who is making that when we are entrepreneurs? Who is checking in with us with our human resources to say, how are you going to apply this?
That's, I think, where the benefit of getting good counsel, good advice really comes in. So but on publication 334, with this self-employment exemption, what are some of the downsides to taking it?
Exactly. So one of the downsides that is taking it is, I wouldn't say complete downside. It's good, but all things that are good, you got to have a plan for, right? So the good is you don't have to pay taxes on self-employment tax, the money that we receive up to a certain amount. The caveat to that is, why are we paying self-employment tax? What is that applying to? It's applying to Social Security and Medi-Cal. So when do the average person taps into that? I believe it's when you're 62 or 65 years old, right? So what does that really look like? Well, my father is 80 years old, right? My father, right? And my mother, right? They're up there in age. The different errors, right? And the baby bloomers, they depend on their Social Security. When they retire, they got their pension, they add their Social Security benefits, and that provides them a fixed income to live off for the rest of their life from that moment, right? And then Medi-Cal insurance, they don't got to worry about, because they've been paying for it every time they work in corporate or wherever they work. But our mindsets are different now, right? It's now we're entrepreneurs. Well, if you're not paying into the taxes, don't expect to get what they got, which was Social Security.
Well, and that's the thing, right? For people who don't know, your Social Security, the amount of your Social Security is dependent upon your income and your contributions into that fund throughout your work life. How much have you contributed? So if, as self-employed people, we haven't contributed, if we've maxed out or exhausted, I love that word, if we've exhausted our
Social Security
publication 334 contribute our exemptions, then we haven't been contributing. So there's an impact.
So let me
what
break
we qualify
it down
for, right?
a little bit.
Yeah,
that
please.
make it more modern and logical. You remember when, well, most entrepreneurs never get this benefit. States allow self-employed people to get unemployment benefits in history that never have been done before. Only people that was working a W-2 job was able to opt into getting unemployment, right? Not a self-employed person, right? But during the pandemic, whatever you put in, that's what you got out over those years. So some people got more than others. Some people got a little bit less than others. It was because how much did you have in your tank? Like gas. Do you have a full tank or do you have a low tank? That was going to justify how much you contribute to that bucket. So in that reality is some people doing the employment, they were receiving more money than they ever did in their life, right? Because they've been working 10 years and paying into it. So that's going to happen once we get a little bit older in age and we decide to retire from working at all. That Social Security that we contribute, right? That's what pay out. But there's a pro to it too. You just have to be informed. If you do not pay into it now, then what is your plan B? And your plan B is starting your own outside of your corporate job, Roth IRA, right? Your 401k plan, right?
Is that tip number 3?
I would say it's still tip number 2. But it's
still in tip number 2?
Yeah,
that's a great idea. That's a great idea.
But it's applying that to something that's going to benefit you, right? We have self-employment, Roth IRAs. We have other retirement plans for you, right? We meaning society, these institutions, financial institution. If you go into your bank, you can set one up. Once you set one up, now the money that you were going to pay for the self-employment tax, now you can put some money aside. So if you were supposed to pay $3,000 in self-employment tax, now put that $3,000 into a savings for your retirement, or just put half of it. It's up to you. But the benefit of that is compound interest. Your money will continue to grow in this retirement account in 10 years, in 5 years, in 20 years, especially if you're in your 20s. If you keep doing that, by the time you're in your 60s, you may have double what you put in, but you're building your own Social Security bucket for yourself, right? That is going to maximize your interest. I look at it like this. You have to have a plan for everything. If notary don't work for you, what are you going to do? Right? If loan signing agent don't work for you, what are you going to do? Well, the plan is you do one. Now you know both navigation. You can go route 1, route 2. You got to choose what route you want to go. But there's a consequence for everything that you do. So is it a win? It's an amazing win. Long as you have a plan B for it. Right?
It's fantastic advice. Thank you, Renee. If there was, and I'm going to ask one of those questions that I'm looking for a blanket answer, and I know they don't exist, but is there a particular age group where taking this exemption makes more sense than others? Or vice versa? Is there just a particular age group? Like if you're closer to reaching Social Security, does it make more sense to not take the exemption or to take the exemption, or how's it work? Can you give us an overview or a generalization?
No, I definitely think that is good. I think in my opinion, right, Miss Renea Dentman opinion is that putting in a Roth IRA is better because it's compound interest. Okay. It's compound interest. Your money's going to grow no matter what. Right? Versus if you put it in Social Security, it's not growing. It's not doing anything. You're just putting it in a savings account to hope to get it back later. Right? And there's no guarantee. So even if I was, let's just say I'm 55 years old, I got about 7 years in my tank before I'm like, okay, well, at that moment, before you became an entrepreneur, right? You was probably working somewhere else, right? Building up some type of pension program, that you were getting back in the day, and trust and believe, Bill, they don't offer that no more, right? Pension?
No.
Or you was building a 401k. So you were able to do that. But what I would say is, if I am working part-time and I'm 55 years old as a notary, and I'm working full-time as a W-2 earner, I would use a lot of the money that I currently make and maximize my current retirement plan with my company. And you offset the income that you're going to contribute for them to match up to some companies 13%, because you know you're going to make it in the back end from just being a notary. That's what I would recommend. So take advantage of that. So the average company, I don't know, match dollar from dollar up to a certain max. Some people can't contribute more than 5%, let's just say, off of their current paycheck. Well, if you know that you want to contribute $1,000 or $1,500 a month to your work pension or your work 401k, I recommend you to max it up to more or double what you're currently doing for those that are working corporate and they're 55 years old. And then you just go out every month and make the difference as being a notary, because that's the greater good of what you're going to do. You're in a position that you can go harder, right? But when you're just, for those that are, hey, I'm 55 years old and I'm an entrepreneur, what do I do? Right? And I don't have the ability to max it, right? What I recommend, we're going to live. We all going to live past 70 years old, right? That's what my best approach is. So I would definitely get with a statistician, right? That at that moment, and it costs a little bit for them to maximize in life insurance. That's the next caveat. Life insurance is a retirement plan, and it's called the IUL, Index Universal Life. That one, that's what I would tell somebody at the age of 55 years old or 60 years old. What do? I am a notary and I'm making good money. And do I still operate and get a Roth IRA? Well, I would tell you to look into an IUL plan. And I would tell you to put all of your money there, and it's structured and it compound interest too. So it's different road that you take. But these are conversations that we're talking now that some people never heard, Bill. So just hear for the first time, and then you're going to hear for the second time. You're going to hear for the light bulb going to click. And you're going to now be educated when you go talk to an accountant or you go talk to an advisor. And you're like, And I'm sorry to say, Bill, some CPAs don't know it like Miss Renee. Why? Because they're not really an entrepreneur. They still have the employee mindset. They don't have a business mindset. So they can't, even though their credential allows them to say they're credible, but they never live the life of an entrepreneur. So they don't always know what is the best for their client, because at the end of the day, they're still living off an employee mindset. I hope that kind of helped.
Yeah, that does. And that's actually a qualifying question now. Anytime I hire somebody on my advisor staff, right? And that is my financial advisors, my CPAs, accountants, they have to have the entrepreneur mindset, because I got so frustrated arguing with somebody who's thinking like an employee. And I'm like, that's just not how real life works. I need somebody who understands that. So that's an excellent point.
I'm so happy you said that. Like having a financial staff, that's your dream team that's going to really make you win.
Yep.
Right. And the fact of the matter, you said that is, and that's what I'm trying to bring to this industry is, my CPA said that. Huh? Just know a CPA is trying to take money too. Okay. And an enroll agent, everybody is in it for the money. I ain't even going to lie, Bill. Right. So because of that, yeah, they may give you a great plan, the plan that they probably wrote, but they don't have they don't have an entrepreneur mindset. So they don't see all the different avenues that can be. So I'm glad that you asked me as far as age. I wasn't prepared for that question, but I'm glad that I answered the truth in the organic way that I can. Yeah,
no, I think that was great. Great, painted a great picture for it. That was a comprehensive tip number 2. What's tip number 3?
All right. So now we talked about in tip number 2, just as an overview of that, a Schedule SE. Okay. Let's go over Schedule C. Okay. Let's track a little bit backwards. Before you can even get to a Schedule SE, you got to go through a Schedule C. And most people know what a Schedule C is because of the PPP. They wanted to know if they were eligible or not, right? So one of the things that I want to go over is people always ask me, what can I write off? What can I write off? Can I write off this? Can I write off that? Can I write? What is the no? I always lead them back to a Schedule C. If it's on a Schedule C, you can write it off. Okay. And you're like, what? All right. So let me just pull up a Schedule C real quick. And I'm going to tell you, pay attention to this number and this range. And anything between that, you can easily write it off. Right. And that's the best advice that I can give when it comes to what can I write off and just being aware of what you can write off. So it's scheduled for, it's 1040 Schedule C, Part 2, line 8 through line 27A. That is what you can write off.
That's a lot of long lines. Who submits a Schedule C? Can sole proprietors do a Schedule C? Do you have to be organized as an LLC or an S corp?
I love how you just bring it all back together, Bill, to make it make sense. This is for a Schedule C is for a DBA, a sole proprietorship, or an individual that is a single member LLC, or a discarded entity in the eyes of the federal government. So they all will have to do a Schedule C. But I'm a LLC, Bill. I'm still submitting a 1040? Yes, because in the federal eyes of the IRS, you're still a sole proprietorship. It's only you, right?
Yeah.
So
right.
That's the form for them. If you're a partnership, it's 1065. If you are a S corporation, it's 1120S. And they all look the same. It says income and it says expense or it says deduction. And it gives you an overall total.
Awesome. Thank you for clarifying that. So this is basically for everybody who's listening, in all likelihood.
Yes, Bill.
To this podcast, you're going to have a Schedule C when you submit your taxes.
Yes.
All right. So tell us about line 8 through 27.
So right here I'm looking at, it says advertising. Can you write off advertising? Yes, Bill. Can you write off your legal expenses, such as your legal shield or your professional service or your tax person? Yes, Bill. Are you able to write off the fact of the matter is my office expenses? Yes, Bill. Are you able to write off the fact of the matter is that I paid myself? Yes, Bill. Can you write off the fact that my utilities, my cell phone bill? Yes, Bill. So these are all the things that you can write off. But remember, when my insurance, my E&O insurance, can I write that off? Yes, Bill. You can write all of these different things off. And there's other things that you can. I traveled. Okay, I went to a conference, right? I went to the NNA conference. I went to the Sustainable Notary Conference, right? Can I write that off? Yes. There are some limits of how much you can write off, but those are business expenses, right? You went and you traveled, right? Can I write off all of those different things? Absolutely, right? But there's a cap on how much you can.
Is there a standard or an average that they're expecting, that the IRS is expecting that you should stay within, like a range on these things, or is it whatever's real?
Whatever is real. The only standard that they have is for your travel and your meals.
Sorry, what was that last word? Your travel?
Yeah. So if you go into
meals.
a conference, and you can't just buy and go to a steakhouse and spend $500,000 and saying, I'm just going to write that off. That was a business. No, there's a cap on that. Okay.
This was another rude awakening for me is the meals and entertainment is not 100% deduction either, right? I learned that the hard way. And sometimes if you're eating by yourself, you can't write that stuff off.
That's correct. We get the question all the time. If I'm out in the field and I'm getting a little bit hungry, can I just write off that McDonald's? But I'm working. who are you meeting? Right?
Exactly.
What are you going over? Right? So just because of this podcast, if I was willing to meet you and we were at breakfast, it's a business meal. Yes, I'm able to write that off. But this is virtual. Yeah. So what if I'm eating right now with Bill? Right? No, you can't write that off.
Oh, shoot. Yeah, I learned that the hard way. I thought I was doing so good stopping at Starbucks 3 times a day, but that backfired really quickly. Excellent advice. What do you say to people who think itemizing deductions, it takes too much time on the front end?
To use the standard deduction, just overall on their 1040, not talking about mileage? Is that what you're talking about?
Yeah, we haven't even talked about the standard deduction, but yeah, they just like, I don't even want to deal with it. Or maybe they second guess that they even have enough deductions to justify it. They just don't bother.
So we can't think like that when we're an entrepreneur. That's the rule of thumb. Being an entrepreneur, you have to submit your Schedule C, right? You don't have the benefit of a W-2. So, for example, on a 1040, on the first page, on the left-hand side of the 2021 1040, line 12A talks about standard deduction. So for a married person, it's about $25,100. For a single person, it's only $12,550. That's just for anyone filing taxes, right? But especially for those that are W-2. That's applicable for us too, Bill, but that has nothing to do with our Schedule C. The Schedule C is going to be carried over to your 1040 to be able to be produced in line 8 of your 1040. Line 8 is other income. Other income is where you're going to put the same way as if you received a W-2. Before you can even think about the standard deduction of am I going to file head of household or that, you have to report income. Your Schedule C is your income, just like as it's a W-2. So I just want to clarify that for the audience and anyone out there saying it's too much work. Well, being an entrepreneur is too much work. Being a notary is too much work, right? Going to the gas station all the time when you're just like, man, I just got $150, but I just went to the gas station 2 days ago. That's a lot of work, mentally just draining. Do I want to stay in the industry? So it's just part of being an entrepreneur, right?
Yeah. So what do you think they're missing out on? What's the cost? Because I know there's people listening because I coach them a lot that do not itemize their deductions on a Schedule C. So what's the cost of that in their business?
So let me just clarify when it comes to itemization. So itemization is really used in the concept of, I want to write off more than $12,550 on a 1040. This has nothing to do with a Schedule C. This is a 1040 saying, hey, do I take the standard deduction or do I take the itemization? Most people do itemization if they own assets, right? If they have a house, automatically the average homeowner is going to do an itemization, right? In general, right? There will do or will not. But if you're more than 25,000 being married or head of the household, 18,000, then itemization comes. But on average, standard deduction is one of the ways that if you don't want a headache, go ahead and take it. It automatically defaults because if you don't have enough than 12,000 to write off, this has nothing to do with a Schedule C. Then absolutely, it's the best way.
On the Schedule C, if they're not turning in a Schedule C, if they're not optimizing those line 8 through 27, what are they missing out on in their business?
They can't file, like there's no other way, Bill. You can't file taxes if you don't do a Schedule C. There's no way. You can't pull there's no way to do taxes. If you're an entrepreneur, you're a notary, and you're saying, I do not want to itemize anything, and I don't want to do a Schedule C, then you can't report taxes. A Schedule C is required, just like even if an Uber driver, they send you 1099s, you have to report it. But I think what I'm hearing is, I'm willing to do a Schedule C, but I'm not willing to do any expenses because it's too much work. Then you're just going to get hit with 15.3%. That's it.
Mm-hmm.
And if I understand your question correctly, is go ahead and do that Schedule C. Go ahead and put on the top how much all of those 1099s are, right? And then you're going to just get hit with what you owe. And that's it.
What do you think the fear around that is? I think it feels like it's an audit. Like people are just terrified of audits. How real is that fear, do you think?
It's real. We're an entrepreneur. We're not paying taxes. What is the point of the IRS, Internal Revenue Service? They want their money that is owed to them.
Mm-hmm.
Being an entrepreneur is pretty much saying, there's no guarantee that you're going to get all your money, right? There's no guarantee I'm going to file taxes. There's no guarantee that I'm going to have good books, right? There's no guarantee. So they look at us as an entrepreneur and a notary because we are able to exempt everything nearly. They got eyes on us, right? Does that mean to be scared? No, absolutely not. That just means to be informed. That just means if you got to listen to this replay for the second time, go do it. This conversation was just to get you informed. So now you know better, you do better. And doing better is just, hey, do you have an accountant in your family? Do your best friend is an accountant? Do anybody know about taxes? Do you have a tax preparer? Let's start having those conversations now. People are like, I want to be a business. Do I go be a LLC? I'm like, well, let's go make some money and see how we're going to navigate that before we even think about filing. Because the moment that you become an LLC, you got to file every year, right? There's no ins or out unless you disclose. Like you dissolve your LLC.
Yeah. I love that. Well, really the value of a conversation like this is that hopefully will inspire people to pull their head out of the sand because it can be intimidating. There's so much into this. And if you were like me and you're not used to making good money, or you just don't want to deal with matters like this because it's not the fun stuff, right? For creatives or whatever it is, it pays to pull your head out of the sand and to look at this and to get strategic about it. When you find the right partner in this, the right advisors in this, it can really be life-changing. All right, let's move on to step 4. Unless you got more for Schedule C.
Nope, I don't got nothing more for Schedule C other than the bottom. And I think that will go into tip number 4. Tip number 4 is being able to write off 2 different things. So when you look at a Schedule C, okay, line 30, it tells you home-based office credit. Don't be scared of that, especially during the pandemic. They're going to be a little bit easy on this deduction, right? The home-based office credit on line 30 is going to tell you to apply that to Form 8829. 8829 is so easy to understand. It's just saying what is your business percentage that you're going to write off. Okay. What number are you going to enter in that? Most people understand that you can't write off your electricity bills, right? Then on your Schedule C. But you can write off your electricity bills from your home-based office. So if you're a notary, and we all are notaries, and you work in your home, the Form 8829 is a huge tax deduction, especially for everyone during the pandemic, right? So on that line, all you have to do, and just walking through, and you can do this as a test run for yourself, right? You need the square footage of your home area. Then you need the square footage of your entire house or rent or your apartment. Once you have that, they're going to tell you, get the percentage of what you can do for your business percentage. After that, line 19 and line 21, what are you going to write off? Line 19, rent. Line 21, utilities, right? You can't double dip. So if you're writing off your Wi-Fi on your Schedule C under those lines, then you can on this form write off your Wi-Fi. But if you didn't write off your electricity bill, then write off your electricity bill here, right?
Is it your entire electricity bill, or is it the percentage of is it the ratio of the space you're using against your house? Is that the percentage you use on your electricity bill, or is it the whole thing?
Correct. But you can only use up to the percentage of your business percentage in general, right? Okay. So the rule is like 33% that you can technically use, right? But at the end of the day, you're never going to get 100%, because if your business expense, if you do the average square footage of a home office is between 50 square feet and 200 in any home-based office, right? Unless you have a dedicated room, right, for just your office space, right? So if you do that square footage from an average of, let's just say 700 to 1,000 square feet for someone living in an apartment, that's only about like 12% of overall how much you can write off. So gotcha. Yes, Bill, this form is definitely easy to understand. It's something that people can just get more aware of, right? And then once you get aware of it, you can get more familiar with it, and then you can put the pieces into the form. But this is something that I don't want notaries to miss out, especially that's all we've been doing for the last 2 years, right? Being in our home, being remote. This is really for remote notarizations too, right? They need to definitely benefit this. People call it a red flag, but it's not a red flag, right? It's not a red flag deduction because of the fact that being an entrepreneur, we all red flags, right? So long as you have and you're doing everything right, the most that they're going to ever ask you is just provide proof, right? And the proof is your electricity bills. The proof is going to Zillow and saying, hey, this is my square footage of that.
I think in the reality of this is when you're straight up and you're just honest about the space, then you don't have to worry about red flags. I mean, is that true?
That is 100% true. A notary ran to me in regards to, I exempt 18,000 of my notarial acts. The IRS is asking me for a letter of explanation. Okay, well, let's write that letter of explanation. Turns out the IRS left it alone. Okay, we just didn't know. She provided all of her notarial acts reports, right? That I went here, her mallet. That was just enough for them. Remember, they just want a letter of explanation explaining it.
Yeah. Great. That's awesome. All right. So awesome advice here. Do you have a tip number 5 for us?
Tip number 5, Bill. Let's talk about hiring your child into your business. Is that fair to say?
I'm intrigued. Hiring your child?
Yes.
How does that work?
Your business. So hiring your child into your business, I'll just give a sneak peek. If you have someone under the age of 18 years old, you can hire them to your notary business, right? From shredding the paper to doing your social media to taking pictures on just your flyers, you can hire your child into your business up to the standard amount without having to do. So I recommend you get a job description and make sure that it is to a point where it's the same. Okay, what are their job descriptions? So go look at that too. At that moment, you can only write off up to the standard deduction, $12,500. Okay. At that moment, do I need a payroll system? Do I need all of this? It'd be helpful, and I recommend Gusto, but it's not necessary because you didn't hit the ceiling, what that is required. And if you follow my YouTube, I explain that in detail, right? I have a whole separate video on that, but I just don't want tip number 5 to miss out on. You can hire your child in your business. Okay.
How does that,
you can write up.
How does that work? I mean,
Okay.
is that a red flag, or is that just something the IRS expects?
It's not a red flag. It's only a red flag up to $12,500 per child.
Wow.
Per child. So let's just say, can you write more than $12,500 for one child? Yes. But at that moment, you have to now run payroll. Okay. So can you do these? can you buy their food and say, this is where I use the money for? No. When it comes to shelter and food, you cannot apply that. Do you have to give your child the actual money, right? Physically to write them off to show that? It's good to show that, but you can put it in a different account, right? You can open up an account for your child and put the money there, or you can use it internally. That's what it is. $12,500. If you stay below that for each child, then you're good to go. Anything more? Can it be okay? Absolutely. Now you just got to do a W-2 now. So that's one of the things that I highly recommend people to understand. Not to hear. People are like, I heard I can write off my child, but how do I do that? What are the numbers? Okay, first of all, step number 1, write a job description. Step number 2, open up an account for your child. Step number 3, make sure your child is involved in the business. Like, for example, they're going to be working 2 hours or 3 hours a week, shredding paper when you get that cancel order, right? Making sure that you take a picture and you're making a post about, family is a part of the business, right? Without them, helping them take it to FedEx or UPS, right? If they're older,
washing
right?
the car, those types of things, right?
Washing the cars,
Yeah.
Making sure that is, and it's great because you put them in the business. I wish my parents would put me more responsible for me to understand that. And we already give our children, I forgot what it's called, like money for the chores, if that makes sense.
Yeah.
Right? Well, this is a little bit of lunch money. Okay, they work in a business. And when they become 18 years old, they have that mindset that my mother wrote me a check for X amount of dollars, right? Or gave me cash because this is what I have. And when they get to that age of 17 or 18, what job experience you have? Well, I work for California Notary Agency, right? Or I worked for Bill Mobile Notary Service, right?
Right.
Absolutely.
Yeah, I love that idea because there is, even though that's a great advantage, I think by bringing the kids or even just the family in general into the business, it helps enroll them in the dream. So those times when you're working on a weekend, when they'd rather just be hanging out, but you're trying to make something happen, when they're enrolled, they're part of it. It kind of helps smooth that out because there's a little bit of sacrifice on the front end, but on the back end of this thing, it can be a really amazing business and it can change your entire life for your family. So that was a great tip. What's number 6?
And
I'm sorry. Yeah.
And let me just talk a little bit about, like most people, when we did the PPP run, and thank you so much for helping us get that word out. Well, when the PPP said, how are we going to enter the money into your account? We need a voided check. Most business owners didn't even have a voided check. Voided check?
What's a check?
How do I write the check? What do I put on a check? I don't know. So therefore, if we go back to tip number 5, which hiring your child, you're writing out checks. You're aware of how that they know how to receive a check. They know what it looks like because guess what? High school don't teach that. Elementary don't teach that. And middle school show don't teach it. I went to a lot of colleges. They don't teach that either.
Yeah.
So they're just the principle of money management.
And life skills. Yeah, that's a really good point. Love that.
So, tip number 6, I'm going to have to give that back to you, Bill, because one of the things that you touched on was making sure your financial staff are entrepreneurial mindset. How do you make sure that you have the right person on your team? How do you even search for that? We talk a good game of 5 tips, but how do we make it make sense by just pre-screening or getting those referrals, Bill?
Yeah, I learned this the hard way. I can't wait to hear what you have to say about it. But I love referrals. But even though, and even sometimes referrals don't work out, but the biggest lesson for me was to ask questions, to interview them, and not to approach them from this desperate mindset of, oh my gosh, I can't believe a CPA would even talk to me in the first place. I'll just take whatever they say and grovel at their ankles. It's not like that at all. And when I switched that to, I'm hiring you and I want somebody who's going to answer questions, like you said, that they have the entrepreneur mindset as well, that they're personable, that they have integrity, that they have a great stellar reputation. Like I do a lot more research now than I used to, but that burned me sometimes. So that's kind of my process. And even then, it's not foolproof, right? There's no guarantees, as you were talking about earlier. There's just every now and then somebody might slip in. It doesn't have to be a big dramatic event, and you just move on and you hire. I ask for referrals all the time for these types of positions, and I move on to somebody who just clicks. What do you
I think that's wonderful. One of the things that I recommend also is going on YouTube, right? Going on YouTube and looking at those that are enrolled agents. A lot of people don't know what a enrolled agent is.
Yeah, what is that?
A enrolled agent is a certification and a type of recognition from the IRS saying that you are capable of preparing taxes for the consumers, right? And it's a highly recognized certificate. Even CPAs have EAs underneath their credentials. They have CPA because there's only 3 people in the world. Let's just say you had a situation there's with the IRS. Well, there's only 3 people that can represent you in the eyes of IRS. There's a CPA, there's an attorney, and there's an enrolled agent. So the enrolled agent is responsible of understanding taxation on the federal level. So if you can't afford a CPA, I'm pretty sure you can afford an enrolled agent. Okay. An enrolled agent is a missing secret when it comes to entrepreneurship and taxation. An enrolled agent is going to spend more time teaching you, explaining you than a CPA. CPA is all about billable hours, right? So I would go on the IRS website, type in advocacy for enrolled agents, and a list will pop up. Where is it? And now start interviewing, right? Start interviewing. Have you ever worked with a notary before? Are you aware of Publication 334? Okay. How do I hire my child into my business? Right? Are you familiar with a Schedule SE? Okay. What is qualified business expense? Have you ever worked for an entrepreneur? I just gave you about 5 to 10 questions to ask in the pre-screen. Yep. Just write those questions down.
That is great advice. Great advice. And I had no idea what an enrolled agent was. Now, tell me more about the search on YouTube. What are you looking for specifically? Are you looking for people who just deliver value? Is that the type of person you're trying to connect with? Or what should our listeners be looking for in their YouTube experience?
Okay. So I'll tell you one person that I highly recommend you listen to. Tyrone, he is for us and not against us. Okay. He is also known as the self-employed tax guy. Okay. And that's his YouTube handle. Okay. His YouTube handle is that, and he cannot send you in the wrong direction. Tyrone, self-employment tax guy. He's going to tell you everything that you need to know about taxes. Okay. He's easy accessible. He has a tax firm, right? And he tells you why you should know it. He breaks things down that is so easy, right? Another person that I recommend you follow, he's more heavily involved onto TikTok than anything else, right? He's called Duke the Tax Guy.
Say it again.
Duke
the tax guy.
Yes. And he's heavily known. You can find him on Instagram and you can find him on TikTok. He gives you literally step-by-step instructions of anything that doesn't make sense. And these libraries of these 2 individuals, they are like bulletproof knowledgeable. And I definitely recommend that. That's where you can learn. But when it comes to YouTube, just search for the education. Put tax. Just put the word self-employment tax, right? What do you pop up? And then at that moment, watch a couple of their videos. Are they consistent? Do they post on a weekly basis? Right? Are they really taking you to the form that they talk about? Like, for example, I just gave you IRS publications, ruling, numbers, lines. If they can do the same thing as Miss Renee, then that's when will look more into it and then make an appointment with them. And most of these people have calendar links. Talk to them. Talk to them about your situation. See what they say. But the rule of thumb, I always say, 2 is better than 1. I don't care if you're in love with 1, 2 is better than 1. That's why I gave you 2. And make your own 2. Why? Because if I told you that you had a medical issue, I'm pretty sure you're probably not going to believe that first doctor. You're going to go find another doctor to make sure that he said the same thing or she said the same thing. So I say that to say, make sure that that's how you interview.
Great advice.
Okay. And make it just make sense and be comfortable who you talk to.
Yeah. I love that advice. You're looking for somebody who's going to treat you like an equal. They can be an advisor and they're going to guide you along and treat you with respect. And you always get a second opinion. That's really great advice. I love that. Renee, this has been an enlightening conversation. I love this. Do you have any other closing remarks or advice for our notary listeners?
Do better because you know better. You just listen to some brutal information, but so much helpful information. I wish someone would have told me, right? Sooner than later. So it didn't cost you really much, right? So because of that, let's just implement at least once a month, if that's what you can. I tell my students once a week should be you're filling yourself with knowledge when it comes to accounting and taxation. But if you just very busy, be intentional. Make 1 day out of the month where you're just going to learn about different tax strategies, learn different major tax forms, study a Schedule C, study a SE, make an appointment with another tax professional once a month. That's only 12 times a year. I'm pretty sure if you make that and you start there today, you'll definitely be a more informed entrepreneur and notary. And therefore, you can teach it to the next person. Don't just take the information, right? I literally could have just said, Bill, I don't want to come on. I don't think this information is something I want to give to you. But I didn't. I came on to share because it's not being shared. So I hope that you do the same. Bring another listener in to this and say, man, this was a valuable episode. And whatever you take, even if you just take one thing, go ahead and tell 5 different people about it.
I love that. Thank you so much. It reminds me of, I think it was Maya Angelou that said, there's no success if you're not helping someone. So thank you so much for coming on and sharing your expertise, your wisdom, your insight, and your passion for this industry and for helping others. Renea Dentman, if you want to check out Renee, I'll have all of her links to her YouTube channel, her website, to her multiple businesses in the show notes, so you can check those out. Thank you again, Renee. And the most easiest way, meetrenea.com. If you just go to meetrenea.com, you can find all of it. Meetrenea.com. That's super easy. I love it. Thank you so much, Bill. It was such a pleasure. All right. Thank you. Thank you so much for listening to this episode of the Sign and Thrive podcast for notaries, brought to you by the Notary e-Journal. Notaries all over the country, including California, Texas, and Florida, are raving about how efficient this journal makes their appointments. Here's what Paul has to say about the ID scan feature.
This is Paul from California. I'm a mobile notary, and I love using the Notary e-Journal because it just saves me so much time. And I don't even need to worry if I'm spelling their name right or if I'm reading their numbers off their IDs wrong. The app scans it for you, and there's no human error here. It just scans it, has the dates already ready for me, and I'm good to go. Thanks, Paul, for that completely spontaneous and unscripted testimonial. This ID scan feature, guys, is a secure way to quickly capture data
from an ID without putting your client's information at risk. You've got to see it in action for yourself. Try the Notary eJournal for just $1 and test out the scan feature today at notarycoach.com/eJournal.